Yo, 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 what is good, guys? How are you guys doing today? And for today, I decided to make something different because I'm not gonna be. I'm sorry, I didn't trade today. I didn't take any trades. Um, uh, Setups appeared, but I just wasn't filled in them, and other setups I completely ignored. And I'll tell you guys why. My whole top of why I ignored the setups and why I wasn't filled on the ES setup as well, which was an A plus setup and I missed out. And I'm gonna try to break down how I was seeing the charts in the morning and what I was expecting for today. All right, so let's get started with ES first. So I have MES, CS, MES. It's all the same bullshit. I just like the MES better because by trading the micros, guys, you guys have more contracts, so you can play around more with how you want to exit your positions. With minis, at the end of the day, depending on your risk, you won't be risking that many contracts and with micros if you want to do like, oh, let me take 25% out here and 50% out here or 10% out here, you can do that by with having micros because you have so many more contracts, so you can take those contracts out without affecting your position. So that's why I like personally to trade micros the more, but there isn't a difference at the end of the day, you know. Chart a, a chart is a chart. But continuing here, what I saw to start the day was this is pretty much 8:30. That's when I usually get into my computer. So 8:30, price was right over here, right? And I always like to start my first analysis looking from the right chart, from the right side of the chart to the left. So the right here, boom, follow my crosshair. All right. Right here, boom. Okay, price is here. Okay, I see some sort of rally-based rally here, but I don't really care. In this scenario here, what I care the most is just this drop-based rally. Because this drop-based rally, look at this move out. All of this here was created inside of this leg out candle. So that's first things first. And second, uh, we broke through this supply zone, all right? If you do it through here, we didn't, but like this beginning here, right here, so we broke through something. This demand zone, it's very strong, all right? And I noticed that we were holding the supply zone. This was literally what I had marked out. Now, where would I want to trade here? I wouldn't want to trade right on this zone. I wouldn't want to take this trade, and I cannot tell you guys on YouTube why, because I have personal rules that I literally worked my ass off to understand them and to properly trade supply and demand. So I'm giving you guys a little bit, but not all of it. You get it? So I would rather take these longs right here, longs from this demand zone, than shorts from this supply zone. All right? And if we zoom out even further, we can see that we have this outside uptrend. So what did I know here? Okay, this right here is just a pullback in this uptrend is going to continue on going higher. All right? This is just a pullback and this uptrend is going to continue going higher. I know that for sure, I just don't know when. So that's why my bias was to go longs pretty much. And then if I scale down to the 5 minute here, as you guys can see, there's this gorgeous drop base rally zone, drop base rally, and then right here we tested it and look at that move out. Boom, huge move out, right? That's on the 5 minute. But also on the 10 minute, I had acknowledged that here, what we have here is a rally base rally, all right? So even to the members that were on the students that were on the call today on my live stream, I said to them, if you guys want, you guys can execute two zones here. You guys can execute this 10-minute zone or execute something right here, right? And me personally, when I take my trades, I like to take my trades and have high risk to reward ratio. So this is such a bigger zone. So me personally, I decided to shoot for this drop base rally zone. And guys, at the end of the day, we're discretionary traders. We don't trade in a if this then that manner. You get it? No, it's completely up to you. I could have done this, or I could have gone to the 5 minute and literally just did a rally based rally that I see right here. You could have done anything. I just this right here, this box, I want to take the longs inside of this area. And I had marked up this demand zone right here. All right? And my whole bias on ES was to go long. I had set my orders here. Boom, boom. And then look at this, guys. Today was so unfortunate because look how close we got to hitting my zone. Look how close we got to hitting my zone. And then if I had gotten into this trade, this right here would have been my TP1 right at 521. And this right here, my TP2 would have been around here. So 10-1. I would have such a big risk reward ratio, but unfortunately I wasn't filled. And yeah, this was my overview. This is what pretty much how I was looking at yesterday. Now let's go to gold. Gold, things were a bit different. I'm gonna do for gold and for crude oil. I'm gonna be scanning these two as well. So for gold here, if we go to that hourly time frame, what do we see? We see that we have two ranges, right? So price is pretty much right here. Oh, my bad. Let me go back. Let me go all the way back to 8 o'clock. All right. So we see that we have these two ranges. Price was going down, correct? I want you guys to keep this in mind. Price is going down here. That's cool, right? And we're breaking through all this demand zone. Originally, you would expect price, because we already broke through all this demand zone, you would expect price to keep on going lower and for us to come and test these lows right here. And the reason why is reversals usually come from uh from extremes, correct? So what is an extreme? Is pretty much these sideways. That's where reversals are gonna come from in prices, These sideways. Look, this right here is an extreme, and we got a reversal from here. Oh, right here, you know. You got a reversal from here. Uh, this right here is an extreme. Got a reversal from there. So pretty much reversals come from these extreme price points, right? And where momentum is down, where's the reversal supposed to come from? From here. But why did we not get this reversal? I want you guys to now this is something that it takes time. I have my eyes trained, so I can already look and spot these things. But okay, I get it that I know that we update or controlling pivot of our trends as we make new higher highs, right? That's what you guys have been taught in lesson 2. So, let me update it. It should have been this, and then we got the breakout, and then it should have been this. We got the breakout, and then it's this. We got the breakout, and then that's the termination of our trend right there, correct? And then we have a downtrend here. But I want you guys to keep this in mind that look at the size of this pivot. What do I mean by look at the size of this swing right here, all right, compared to the sizes of these swings. Look at this one and even these right here. Look at this one, this one, this one. Look at these. Which one is bigger, right? This one is obviously bigger, all right? So even though we terminated this uptrend here, I had this breakout point in marked up because it was a very this pivot is a very deep pivot, compared to these ones right here, which pretty much what that tells me is that on the higher time frames I can see a higher time frame zone, which is this. On the 8 hour, you guys see this pretty much. This is a zone. Maybe on the daily, you guys will see a best look drop base rally right here. Uh, it tells me that it's a zone. And why is that important? Because uh, that's where the reversal is going to come from. It's a daily zone. It's a drop base rally daily zone, right? Correct? Look, drop base rally daily zone. And this is a rally base drop supply zone right here, right? And on the hourly, what is curve? Curve is something you guys are going to learn. I believe it's on day 3. No, no, it is for sure, guaranteed. On day 3 of the foundation series that I'm posting on YouTube, which will be coming out soon, guys. Don't worry, gonna be coming out soon, day 3. And pretty much this daily zone is curved to the 1 hour. The members that are already part of my community, TTA, they know what this means. So this they will understand. But this is curve, all right? for this is curve for the hourly. So I had this marked up because if we were going to reverse, this is also an interesting area to keep in mind, you know, just to keep in mind. And this is literally what happened. Our first supply zone is right here, and we got the break of it. Look, boom, we got the break of it. Let's see what time was. Okay, look, I wasn't interested in taking any of these shorts. Even though he didn't touch it, in my eyes, we were still like, okay, we can go long from here because we got so close. I was confident in these longs as well. And momentum is to go up. You know, look, we've been breaking out. Momentum is to go up. So I wasn't confident in these shorts. That's why I had this supply zone marked up, but I wasn't interested in taking any shorts in this supply zone. So we cracked through here, and then what was my game plan? All right, my game plan is I'm gonna take longs from here. If we get to this change of this segment here, this pivot, I'm gonna take longs from here, or I'm gonna put in my Fibonacci to look for areas that are on the extreme of the range. So this right here is the high on the range right here, and I'm gonna look for for shorting opportunities up here. All right, and take a look, take a look. So let's look for good supply zones here and above. This is what I see here, right? You guys may look, oh, this is a gorgeous rally brace drop. But if you guys look to the left, this right here, there is a supply zone. Let me see if I can find it on the lower time frames. Uh-huh. If I go down to the 1 minute and 2 minute, I can't find it. But it's just a matter of I've done this so many times that I know that this is a supply zone right here. And this is a supply zone. The reason why I'm marking this one up is because this supply zone held the market here, held the market through all of this. All of this here is not original. All of this is just a test of this supply zone. All right. And then there's this also, there's this wick here, which there's also more orders here. So we could be so liquidity sweep, touch into the zone, maybe liquidity sweep even all of these orders here, but this is the whole area. This is the general area, you know, that we want to go lower. So I would do something over here, all right, which is from here above. So this is our first zone, pretty much. And then our second zone, I'm looking, guys, hold up. I'm going through time frames right here. I like this here. It's a 15-minute rally based drop, and look at this evidence wick right here. You see? Pretty much what this wick tells me is that there's a barrier here, and this barrier is so strong that price shot all the way there, couldn't go through, and look at this big rejection, boom, from literally this price point. So we could see some type of liquidity sweep, touch into the zone, and then boom. Same thing vice versa here, you know? So these are my two areas, and for shorts, and if I were to go long, I want to go long somewhere here. So this is a strong zone right here. Look, this drop base rally that broke out and has been tested. You got to keep that in mind. It's a strong zone. And another one that I would mark is, let me see on the 10 minute. There's something here, a drop base rally on the 10 minute. You guys see it, but here's a little golden nugget for you guys. All right, all right, golden nugget. I can either take this full 10-minute zone, drop base rally that the market tested here before and before, right? Or what I could do is this. Let me just change the colors here to white. I could just I like to do this a lot, all right? I could just take this zone here as like, okay, wick to wick on the beginning of the zone, this is where I would have been filled, and then this is another entry. Because instead of me taking this whole risk, I'm breaking it down into two zones that it decreases my risk, you know, and my reward is much bigger. And then let's see what's gonna happen on gold. No. All right. But I wouldn't trade any of this, guys. I would only look to trade near the extremes. And look, we've hit the supply zone here. So let's say you were to take a short, boom, and then what is our nearest zone, guys? What is our nearest opposing zone? I usually target nearest opposing supply and demand zone. So there is something here. There is something here, and believe it or not, this is a zone right here. So, oop, this is a zone right here. Boom. But where I would personally target, it's something right here. Here, this is like a safe target. That stop is way too wide. Hold up. And I know that this is where like it comes down to you as a trader. Me, I would not take this trade because the risk to reward profit potential is not there. You know, it's only from here to here. If I take it, my TP1 is going to be 1.36 to 1. But let's see if this trade works out. Okay, boom, that's TP1 hit. I almost got stopped out. And look how funny. We ended up liquidity sweep of these highs and boom, we're going lower. So that would be my TP1. Your TP2, me personally, I would shoot for something way lower than. We can still hold this zone. I know that. Alright? We can hold it. This is an area here. This is a whole zone. And we shouldn't assume that we're gonna break through it. But usually, guys, this is a rule for me. When my first TP is 1 to 1, I like to have my second TPs at 5 to 1. But realistically, where you should be putting your take profit on this trade is somewhere here as your TP2, which ended up getting hit, you know? But look, you as a trader, there isn't that much profit potential. That's why me, I would have skipped it, you know, and let's see what the price ended up doing. And then price now came back up and we're over here. So yes, that was my daily overview on gold. No, no there wasn't any A plus setups on gold. Not that I saw, not that I could have been filled, unless it was literally by like 3 o'clock and look, is the profit potential even there? No. So would I take it? No. You know. And now let's go to crude oil, guys. Crude oil was very interesting. The reason why I just decided to stay away, which okay, it was dumb on my part, but the reason why I decided to stay away on crude oil was was because we have been on this range, correct? We have been on this range. We have been sideways, right? And since we are sideways, where I'd like to trade is just near the extreme. So near that range right there, or like somewhere over here. Alright. Somewhere near these extremes, that's where we usually get our reversals from. And putting the Fibonacci tool right here, between here to here. I see that we got low on the range. This is low. From here to here, it's middle. And then from here to here, it's high. So I saw that we got low on my range. And I was like, alright, bet. We should start going up soon. Why? Because price has gotten low on the range, correct? Yes. But the reason why I decided to step away is just because we have been in this sideways action right here. We've been inside of this box. You know, price has been like trending in this box. So I was like, whatever setups comes in here that it is part of this sideways trend has a smaller probability of working than any other than a setup in an uptrend or in a downtrend, you know. That's what I thought to myself. And on here, the reason why I wanted to trade these is simply because we have an uptrend here and we have an uptrend here, but if we were to have a downtrend, which was the case during this time, I could have also taken the shorts. It's no big deal, you know. It's just because this we were in the sideways range, but okay, this is what I had seen. All right, let me skip because that's 3 in the morning. We gotta get to here. 7. Okay, that's 8. That's our perfect. Okay, price is already here. I know that we got in low on the range, so I'm supposed to. I'm expected. I'm expecting price to go higher. You feel me? So right here is where I expect us to go to. Okay. Bro, these water breaks, they be mad fire, yo. Hold up. Hold up, familia. But now let's get back to it. Right here, I saw that we had an uptrend and we got low on the range. So what is this? Low, high, higher low, breakout, correct? We we didn't have an uptrend yet, but I was confident that we were going to make this uptrend. And the reason why is we already had this low. We were pretty much bouncing. You can already see an uptrend right here, right? So low, high, higher low, breakout. You can see that first uptrend. Price is low on the range, and we broke through this supply zone right here. All right. From the moment we broke through this supply zone, I said to myself, look at the room to run. Bro, we could, our nearest opposing zone is like right here. Look at this. This pretty much is 57 ticks you can capitalize on. And I'm telling you that you can capitalize. You like this. If you want to be a consistent, profitable supply and demand trader, you want to be executing in this area. You feel me? You want to be executing once price breaks above here because look at the room to run that you have. I must say this: traders like to trade when we don't have range. Look at this range here. This was obvious. I just decided to stay away because we're in a sideways action. But if it wasn't any other market condition, and I'm low-key bullshitting right now because I should have been into this, and one of the students that were in the Discord, they took this trade. Which, because I alerted them to, I was like, hey, there is a setup here, and if I were you, take it. The setup is showing up. You want to take it. You know. And look at this. Uh, Looking at it here is just boom. Why didn't I take it? Why did I was stupid. This whole sideways action scared me out. To be honest. Mm. And not just that. I knew that if I were going to take a loss, that if I taken a loss today, it was more of an ego thing. Because if I were to take a loss on this setup here, I knew that I wasn't gonna have any setups on ES or gold. I just knew because of how the market was moving. It was so slow. I knew that things were slow, and even crude oil was moving slow. That's why I decided to like just opt it out. But look at this. From here to here, you have 57 ticks you can capitalize on, all right? And you must capitalize on these 57 ticks because you don't have room, you don't have any opposite zones. You may have some bullshit on the lower time frames, but it's all bullshit. You don't see anything in the higher time frames, you're good to go. You feel me? So take a look here, all right? Boom, we get that breakout. From the moment we get that breakout, the setup is obvious. Low, high, higher low, breakout. And then we have a rally-based rally here that broke out. So, most traders, they were marking their zones right here. Okay? Which that is correct. That is the way that you've been taught. Yes. But when you are a discretionary trader, you don't want to follow everything. You want to be suave. The real shit. You want to be smooth with it. You want to bend the rules a little bit. You feel me? And I bend those rules sometimes. What I had marked up for here was this. Call me crazy, call me whatever you want, but this is the proper zone to take. And I know that because I've put in the work, I've done my research, and I know this shit. This is the proper zone for you to take. And let me tell you why. The reason why is we have all this test of a test of a test of a test of a test. You can see rally base, rally base. It's all tests of tests of tests, correct? Look at this. Look, this is the leg in to all this order filling station, correct? Leg in. But all this order filling station with that leg out, everything happened from this leg in. Okay? This leg in, think of the leg in, this leg in, specifically on this scenario as the bridge that's supporting all of these orders right here. Think of the leg in as that. The leg in is what's supporting all of these orders here that sent price higher. Okay? Because it's all a test of a test of a test. All right? And that's what I had marked up. But look at it. Boom, 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 boom. Crude oil was just taking its time. The setup came, it really didn't. At around 10:15, that's when the setup would have been triggered. And let me show you guys this. My student, he marked his own right here. That's what he had marked up, I believe. Something like this. We go to the 10-minute. I believe it was something like this, but I remember his zone got stopped out. Oh, it was on the 10 minute. This was the leg up I had marked up right here. This one, my bad. It wasn't on the 5 minute, guys. I had it marked up on the 10 minute. And my friend zone, my student zone got stopped out. Take a look. His zone got stopped out, and this one held. Let me go on the 5 minute. Okay, okay, yeah. Look, even here, the leg in held. Why? Don't think, don't ask me why. I've looked at charts for so many times, for so long that like I've seen this just happen over and over again. It stinks. But it's not like this in every scenario. You still need to know every scenario because there is a scenario for every criteria. For every like setup, there's a scenario for everything. You gotta study up. That's what I'm pretty much trying to tell you guys. But this was the setup to take. And look, you get into this, right? You get into this. You always give one to three. No, you always give 2 to 3 ticks as your stop buffer. So 1, 2, 3. All right. This right here could have been your TP1, a break off that high right at 2.38 to 1. And then look, boom, we got the break right there. And then your TP2 can be based off of the hourly. And where is it? Look, 5.5 to 1, bro. And we smacked that. And we went even higher, 10 to 1, So this was a perfect trade I just missed out. And this is all the action for today. If you try to take any trade that wasn't part of this, in my opinion, you are still trading incorrectly. You are not trading with curve. You're not. Maybe. Okay, maybe if you had taken something on the 1 minute with the 5 minute as curve, great, cool. Yes, that I'll accept that. All right, because that's a lower time frame, lower ranges, different game. But if you were looking at the 3 minute, 5 minute, and hourly, those were the the zones that you get consistent results off of. The zones that I showed you guys are the zones that are always gonna work in a consistent manner. Maybe you've made money from a supply or demand zone that have worked in today's session, but I'll guarantee you it won't work tomorrow or after tomorrow, or because there are zones that work from time to time, but if you don't have them consistent, if you don't have them clearly defined and you're just trading the trade, you're not going to see success trading supply and demand because it is simple. It is very simple, but you got to put in the work. But yeah, today this was today's trade review. Nice little 30-minute video breaking down ES, crude oil, and gold. And I'll see you guys tomorrow. You guys know where to find me. The link is in the bio. Hell yeah, gang, gang. You guys know the vibe. But yeah, I'll be seeing you guys tomorrow and have a great night.